Hey, welcome back, everybody. And well, it's a little cool, a little wet outside, but it is October, although we were super spoiled with some really absolutely fabulous weather. Now, let's get the show on the road here. Let's talk a little bit about what the heck is going on, because you see, we're seeing mortgage rates actually, well, they went down, then the Feds dropped the rate, they went up just a little bit, then they came back down, and well, they're kind of bobbling right there, but still year over year low. What the heck is going on? What does that mean for our real estate market? And are we starting to see a slide? Hang on, let's find out. All right, so when we talk about our market, we're talking about the Puget Sound region. We are not talking about what's going on in other areas, because this is where you are buying your home or selling your home, and this is the only place that it does matter. So we're going to keep hyper-focused here locally. Now, we're going to talk about residential only. We're not including condos, because I think that skews most of the residential numbers. Condos are a different report. Same thing with multifamily or vacant land. If you want those, just let us know. We'll send those off to you. Now, here's the thing. Refi demand ebbs gradually as rates remain range-bound, meaning that what we're seeing are rates that they're still year over year. We're actually down 0.02, which is super awesome. From last week, we're down 0.02 from where we were at last week, but it does go up and down every single week. Now, what does that mean when we talk about the refis? And if we head over to our next picture here, when we talk about the refis, you can see the spike there. And when rates come down, we spike up on activity. Now, the chart on the right-hand side, which we highlighted purchase, you can see also that we have been heading in an upward trend, where we were quite a bit lower in 2024. But yet we're not talking about earth-shattering numbers here. Now, here's the funny thing. When we talk about some of the comments, right, mortgage rates on fixed-rate loans changed very little last week. Refinance application activity generally declined because, well, rates have been bobbling. But purchase activity declined about 1% for the week, but year over year, we're up actually 14%. I'm ad-libbing there because I know that answer, and continues the growth on an annual basis. The stronger growth for FHA loans favored by first-time home buyers was a big number for a lot of folks. Why? Because there's less cost to get into it. Well, I shouldn't say that. There's a little more cost, but lower down payments, and they allow for greater debt to income ratios with some protections because it's insured. They have mortgage insurance. Now, FHA is fine, but remember, unlike conventional, where if you have payment mortgage insurance, or what's called MI or PMI, you will be able to drop that off at the 75% loan to value in the future for conventional loans. FHA now, that's forever. The only way to get rid of it is to refinance it out. So just keep that in mind. Now, as we kind of roll along here and we take a look at, let's bring this back up. Hang on a second. There we go. When we take a look at what's going on in the news world, it says refi demand ebbs gradually as rates remain range-bound. Mortgage rates move slightly higher, and that's very, very slight. You can tell that on the upper right-hand corner at 6.32. You can see where we were at on that green chart earlier this summer, and we have continued down that little dip and then back up again. That's where the Feds dropped rate. And then mortgage rates technically lower, but effectively flat. I 100% agree with that. We're just kind of rolling on. Like our real estate market, we're just rolling along. And in fact, I had a really good conversation with somebody as we were debating and going through what we felt that the market was doing and where things were going. And oh my gosh, there's a lot of these internet chatter that's going on, and mayhem and Armageddon's happening with real estate. And I start laughing. I'm like, what are you talking about? I said, I got a question for you. Here's a question for you. Did anybody, and go back to my channel because you can see them, did anybody in 2019 say that, oh my gosh, it's real estate Armageddon, we're heading down, it's catastrophic? No, they didn't. Why? Well, because it's not. And in fact, 2019 was still better than some of the other prior years because we were coming down off of, well, some of the craziness that happened in 2008, 9, and 10. And then, of course, we started drawing down inventory. 12, 13, 14, 15, the market started to settle out. 16, 17, we had a really great market. 18 wasn't so great. 19 carried and then went across. And you said, George, prove that. Can you prove that? Can George prove that? Hang on. George can prove that. Hang on. Let's take a look at this. So we did a chart from 2019 to 2025. When you take a look at the light green, well, that is that's available inventory. Oh, look at that, 2019. I'll be darned. And then, of course, the dark green, well, that's the solds, okay? Look at that. Seems pretty straightforward. Now, granted, between 2020, when you see the COVID shutdown there, through 2022, and you can see the spike in inventory, that's when the mortgage rates went crazy. And that also started the beginning of our recovery for our inventory levels because they were horrifically low. Okay, and now we're getting back to normal rates, inventory. So when we take a look at that, hey, that's super important because we are moving right along. 2024, last year, some people say, oh my gosh, George, how are we doing compared to last year? We're almost identical. The only thing that has changed is that we've got slightly better rates than where we were at last year, and that pent-up buyer demand is starting to filter back in again. We're going to see that here in just a little bit. And so when we take a look at even the Fed rate, and the Fed rate's super important because that also talks about what buyers are going to do. The lower the rate, the higher probability a buyer is going to want to step in. And we are seeing that. And you can see that we're at 6.3% there. You see that little V dip there on the right-hand side. That's where the Feds actually dropped their rate. Ours bobbled up, but not like it did on the far left-hand side. That's where they dropped it a half a point last year. And of course, you see that just went crazy upward. But we have been on a downward trajectory, which is really good. So when we talk about the real Northwest MLS, what's going on in our market metrics, super important. All right. So as we take a look at just what's going on with the average days on market, we're seeing more time on market. That's not uncommon because when we take a look at the new listings, we have 910 that came on market. We had 1,041 went off market. Okay. So we had more than 100 home differential just in that 1 week. Now, again, like last week, we have a large number of homes that absolutely reduced their price. We have 904 of them versus 910 that came on market. So that clearly is showing that some sellers were a little too aggressive on price, A. B, we are seeing our seasonal slowdown, and you're going to see some numbers where our average pricing is still heading in an upward trend. But we're more kind of flat, slightly 1% elevated on that treadmill, but we're definitely not on a downward trend. Yes, we've definitely seen that pendulum swing from the seller side back to the center, maybe just a hint to the buyers, but not by much. And we can see here, we're taking off more homes as far as pended than we're bringing on. And that is a big deal, okay? So as we take a look and we continue down the path of, hey, what's going on each and every week? Remember, subscribe, smash, do us a solid. Let us know what you think. Feel free to ask your questions because at the end of the day, well, that's what matters. So let's continue our Northwest MLS. So here we go. We talk about what's going on in the market. What are we doing? And let's blow these numbers up for you. Okay, so if we look at the bottom, that's month over month for October. And of course, these are up to the 10th. And as you can see, we've had 109 homes that came on market, or I should say less homes that came on market for the month of October so far. We're down 110 homes. Funny how those two numbers pretty much match. But we do have 74 more homes that absolutely went pended. And so we have a slight increase, but it's not overcoming the lack of homes coming on and what is actually closed. When we take a look at the upper chart, that's a year to date. So we're still up just shy of 1%. And then, of course, our pendeds are up 1%. And you might be saying, okay, George, you're going through all of this, and that's all fine and dandy. But what the heck does that mean? Super simple. We are still heading in a very positive direction. We are not heading down. And in fact, when if we take a look at our pricing here, let me get myself out of the way. There we go. Look at our average sold price. We're up 1.1% year over year. And just for the month of October, we're already up 4.4%. And again, those aren't crazy numbers. That's just telling us we are still heading in a positive direction. We're still one of the top 5 sweet spot markets across the United States. And that's something to keep in mind because even though there's a lot of media coverage on the economy and employment and whatnot, we are still seeing some really solid numbers still coming across. So if we head over and we take a look at, excuse me, new construction is taking a little bit of a beating this last week. And you might be saying, George, how is that possible? Well, if we take a look at the bottom chart, the dark green one or light green one, look, we're actually up on actual homes coming on market. We've got 52 homes last closed month to date. And then, of course, we're up 8 pended, but again, not enough to take over. But when we take a look at the upper chart, you can see that the handwritten note there, it says, hey, we are short on pendeds 13.4% year over year. The however is last week we're at 12.7, so we're losing a little bit of ground there, and that's an unfortunate thing because the new construction and if you're going to look at new construction, you should be looking now because between now and the end of the year there are some absolutely amazing opportunities that are going to be available for you if you are interested in that. Make sure that you're working with a real estate broker that knows how to negotiate new construction. Don't get somebody who's thinking, that's going to go out and, we're going to get the price down and everything else. That's probably not going to happen. But there are other ways to maximize benefits in the background, and people who are familiar with dealing with builders, you will be rather happy about that. So when we take a look at that, some people say, George, why did this happen? Why are the builders starting to lose a little bit of ground from where they were even at last week? Simple. Rates continue to be down. There's more opportunities that are out there as far as resale homes in areas that people want to be in without having to drive. They're not paying that 10% premium. And more importantly, they get slightly, in my humble opinion, better homes in a lot of ways. And so they are diverting there because it's cost effective. They get better rates. They get a bigger, a better home on a better yard many times and in an area they want to actually be in. Not that new construction's not, but it's not always in the ideal place. So when we head over and we take a look at, let me drop myself out here again. When we take a look at what we're doing price-wise, hey, we're doing super good. No complaints, right? They're up as far as, the average sales price is up 18.2%. And the average sales price year over year is up 3.2%. Those are just really good numbers. And we can't really say, hey, that's bad because they're doing well. They're just not getting the volume. Now, bank-owned homes. Let's talk a little bit about bank-owned homes. Let's get real because I had somebody challenge me about my comment regarding bank-owned homes and that, hey, they're bad. And I'm like, no, they're not. No, that's not the case at all. In fact, we have hardly any bank-owned homes at all because here's my chart. So as of today, there was 104 total Arios that are in basically from Marysville all the way down to Yelm, Olympia, and whatnot. So I did that same area, did the same snapshot, but I did it for just the month of September of 2010. Just the month of September. Okay, that's it. All right. And actually of the same, not the entire month, but just a snapshot. I think it was a 2-week window, 642 homes alone. Okay, there were more in South Snohomish County than there were in the entire Puget Sound area of the map on the other side. So when we talk about our foreclosures, going crazy and all of the attempts of this legislation that they're trying to put in place, I get that you're trying to do good. I get that. The however is, we're less than 2%. And I don't understand why people are getting so crazy over something that really is a negligible issue. You'll never stop all foreclosures. It's just a reality. The however is we are super low. So to create something based on a false dialogue, in my humble opinion, is wrong. And to charge people for it is wrong. But I'll get off my soapbox. Let's just take a look at the real numbers here. All right. So as you can see, we had year over year, and that's the chart on the right. We had 54 more homes come on market. We had 55 more homes that got sold. One and the same. We're actually down for number of homes available today versus where we were at last year. Inventory for the center chart there for everything that we're looking at. Hey, we're down 26%. That's just 5 homes. That's a small amount, right? Same number of solds, and we have a few more pended that happened. What does that mean? Foreclosures are not a great deal. They never have been for the last few years, since 2020. So I guess that's 5 years. So banks do paint, carpet, and vinyl. They get it on the market. They get full market value. Why? Because our inventory is still recovering. We still have a lot of room to go. Our market is still doing well. If you have questions, put them down below. Tell us what you think, and feel free to ask questions. There's no strings attached. Smash that subscribe button. Do us a solid. Give us a big thumbs up. Let us know so other people can enjoy this. There's no marketing. I just hope you guys enjoy it. In the meantime, have an absolutely beautiful weekend, and I will talk to you later.